Hi, I'm Senator Kay Bailey Hutchison. I'm pleased to welcome you to this edition of Capital Comment. There is no greater symbol of the American dream than home ownership. In a country that prizes individual freedom and economic independence, our homes are a lifelong investment. However, a recent decline in the U.S. housing market and disruption in the credit markets have threatened the financial security of many Americans. During the final quarter of 2007, home prices declined by 8.9%, the largest drop in 20 years. In March 2008, new home construction plummeted to its lowest level in over 17 years. When the overall economy began to signal a downturn, Congress acted swiftly to address the situation. In February, we passed a broad stimulus package to try to spur our struggling economy. As we consider further solutions to this growing problem, our approach must be prudent and responsible. We must allow the market to correct itself without sweeping government intervention, if we can. Too much interference could lead to damaging and unintended consequences for our economy. Our guest today, Senator Kit Bond, has served the people of Missouri as governor and then in the United States Senate, where he has been elected for over 20 years. He is the ranking member on the Transportation, Housing, and Urban Development Appropriations Subcommittee. In March, he introduced the Security Against Foreclosures and Education Act, or SAFE, which offers common sense housing solutions to help families and neighborhoods in need. Thank you for being with us.
Kay, thanks very much, and thank you very much for a very good description of how important home ownership is. It really is the cornerstone, the American dream. People long to have their own home, and as now, they're threatened with foreclosure. It's devastating to the families. It can ruin their credit. It can take away their dream. And even beyond that, it's a threat to the communities. I've traveled around Missouri, and I've listened to a lot of local housing advocates, mayors, councilmen, aldermen, who say we have a real problem when we have 20% of the homes in an area in foreclosure. It's driving prices of all of them. It's putting pressure on others. And it destroys the retail base, the stores, the banks, the schools that serve those people. So this is a crisis for families, for communities, and regrettably, because too much of this bad paper, this over-leveraged paper, was spread not only through our financial markets, but the world financial markets, that it threatened the entire financial system, what they would call a systemic risk, because there were too many bright people slicing and dicing and leveraging these pieces of paper that probably came from predatory lending in the first place.
I especially liked the point you made about how a foreclosure or a drop in price in someone's neighborhood affects everyone in the neighborhood. Many people might think, well, you know, I'm making my mortgage payments, I'm okay. They don't realize that if you are having foreclosures or people are going into bankruptcy in your neighborhood and homes have to be sold at fire sale prices, that it's going to affect the value in your home and could also threaten your mortgage because the value of that loan might go down. So it's a very important issue all over our country, and one that Congress is trying to address before it becomes an epidemic. And so that's where we are now. Let me ask you if you think that Congress has done enough and we can sort of ride it out, or do you think that we're going to have another stimulus package?
I'm very skeptical, as you are, of spending a lot of money on any so-called stimulus package. I think the one that we passed earlier this year that's now coming into operation and the checks are going out may help us a little bit. but using more borrowed money just for stimulus is not my idea of really what's needed. I think the bill that I introduced with your help, and I very much appreciate your great leadership on it. Your provisions in the bill are very helpful. We were talking about doing some things that would help people avoid foreclosure. And I spoke to a group of 220 financial counselors who are gathered in my state earlier this week. And they were there to help people figure out how to work with their lending institution to avoid foreclosure. Many of these people had seen their mortgages increase by 50%. And if you're on a fixed income, that's a killer. We put in money for state housing finance agencies so they can go back in and refinance these mortgages and bring it down to the rate that they initially agreed on. We, in the bill, we modernized the Federal Housing Administration so they could come in with their secure program, housing FHA secure. There are a number of things that we can do. We can't save all of them, and there are some lenders probably who are going to suffer. But we shouldn't be in the business of salvaging lenders.
Well, one of the things that I tried to put in, did put in the bill, is the helping the home builders. The first stimulus package we passed didn't really help the home builders stay afloat, and of course, if they're having to sell inventory at fire sale prices, that again hurts a whole neighborhood or a whole area. So putting in tax treatment of a loss carryback certainly would help them not have to sell inventory at a fair price or low price, and try to keep the fair prices in the market to keep the values in everyone's home the same. So I thought that was something we left out of the first stimulus package, and we did have a lot in there that would help small businesses make capital investments, which of course creates jobs. Important. That was the best part of it.
That's probably the best part, clearly.
But now we're, I think, looking at whether we're going to be able to see this dip be filled in without these other major initiatives, and I really worry that we're stimulating, but going into a major deficit, another major deficit, or lower deficit, higher deficit.
Increasing the deficit.
I think that is something that we've got to be looking at too. We're just in this catch-22. Of course, we've got higher food prices, we've got higher transportation costs, and everyone is suffering from that. And then you have this kind of a whammy, triple whammy, I guess, if someone's home mortgage payment can't be made. We've got to be ready to go, and I think the parts of your bill that are very helpful might be enough without a major influx of our taxpayer dollars, which is what certainly happened in the last stimulus.
Well, one of the things that was also in the bill that you and I sponsored, our colleague Johnny Isaacson proposed a $7,000 tax credit over 2 years for a family purchasing and moving in and living in a home that was either in foreclosure or facing foreclosure. Now, that surprisingly was one of the most popular pieces of the legislation. As I talked to community leaders and local elected officials, they said, we've got to do something. We may have the people who may have been in the homes, we may have to get them into rental housing, but we can't afford to have that house sitting empty. So that is in the SAFE bill as well. Now,
there's one other point on that type of thing. The House also did something similar, not exactly the same, but they made it for first-time home buyers, and in any kind of home, and that's, I think, a good incentive.
Now, there's another thing, as we're getting around to, is a bill that's come over from the House. It's some 400 pages, and they claim it won't affect the budget because they're going to get the government-sponsored enterprises, Fannie Mae and Freddie Mac, to pay for it. I have some concerns about how we go into publicly owned companies and pick the shareholders' pockets to tell them to solve a governmental problem. Now, I believe the administration has raised the specter of a veto. They do have some good things in it. They have tightened up the regulations of Fannie Mae and Freddie Mac to make sure that they make loans in a sound way. And I think everybody who's seen the previous overseer recognizes that they're not effective. But that is a good step. But we are still studying the bill. I'm kind of scratching my head to say how you fix the process by telling a shareholder-owned firm that they have to collect fees to perform a government function. That one I haven't gotten my mind around yet.
Well, I think everyone realizes that we need to make sure that there are transparencies in
Right.
Fannie Mae and Freddie Mac, and some of their financial operations have certainly been questionable. And I think we need to take some action, but it has to, of course, be the right action. And then FHA modernization,
Right.
opening up FHA to give them a higher threshold to help our lenders be able to go into more places and do more, I think has been very positive, but it's temporary, and so we need to try to do that on a permanent basis.
One thing that we need to do to protect taxpayers is to make sure FHA doesn't issue any no down payment loans. Unfortunately, the no down payment loans are just a small percentage of the total loan portfolio held in the nation today, but they're a very large percentage of the defaults, because if people have no money in the home, then it's in their interest to walk away. And some of them could have been just speculators. You get a no interest, no down payment loan, say, hey, I'll sit on the house for a couple of years and see if I can sell it for a profit. While the market goes down, they walk away. And we don't want FHA backing these very, very risky loans. And that's one of the things I would try to add on the floor. But I want to mention one other thing that I think is very important. My wife is very interested in looking at houses. And we've been married 5 years and are now living in our fourth house. And every time you buy a house, you get a stack of documents like that my fellow lawyers have taken great pride in crafting to put every condition in the world in it. But nobody reads them. Nobody knows what the terms of their loans are. And maybe it's time to get simple and say, this is what your loan's going to cost you. This is how much it can go up. You can or cannot refinance. If you try to refinance, you will have to pay a penalty. One sheet. I really want one sheet that tells me what I need to know. And a lot of people I know are confused, and maybe that, along with good counseling, will help people from getting into the problems that they're in the future. They're now in, keep it from happening again to them.
You know, I think everyone is going to relate to what you have just said. Anyone who has had to sign all those papers and see all those costs, and
I think it took me 45 minutes just to flip through and sign the pages, and that wasn't taking time to read it.
However, I think there are probably a lot of guys out there sympathizing with you that your wife has wanderlust in the home market. Hopefully you're settled now, right?
That's what she told me after the last house. But
did she tell you that after the second and third one too?
Second one was not a deadlock. After the third one, it was absolutely this is our home forever. So we're now living in the perfect home of 2007, and I just hope it holds.
Good luck, and
Thank you.
Thank you so much for being with us. You have really been a proponent in the housing area for a long, long time to make sure that we have safe and sound practices. So I appreciate your being with us.
Well, Kay, it's been great to work with you on the committee and have you helping on the bill. And as in so many other areas, you are leading for the people of Texas and making sure we get some good Texas common sense in the measures we pass.
That's what we all need. Thank you very much. Well, thank you again to Senator Bond for being my guest today. And now it's time for On the Issues. Each month, thousands of Texans contact my offices to express their views or to ask questions. During each program, I like to take a few minutes to share some of the mail I've received. Our first letter comes from Melanie in Pearland.
Dear Senator Hutchison, what is the government doing to protect American homeowners who are at risk of losing their houses as a result of the current mortgage crisis?
Thank you for your letter, Melanie. Too many families in Texas and across America are feeling the effects of the mortgage crisis. An increase in foreclosures coupled with a liquidity crisis and an inability for borrowers to secure loans leaves homes sitting on the market. These conditions increase the housing surplus, which drives down home values for everyone, just as we were discussing earlier in the program. As a result, many homeowners owe more on their mortgages than their real estate is worth, and foreclosures have left many homes vacant. The U.S. government continues to address these issues, and the housing industry has been actively involved in efforts to help stabilize the market. In October of last year, the federal government joined with counselors, lenders, and investors to create the Hope Now Alliance. This organization helps struggling borrowers who are unable to pay their mortgages. Hope Now recently announced that repayment plans have helped more than 1 million borrowers avoid foreclosure. The Federal Reserve has reduced interest rates multiple times, making mortgages more affordable. My guest today, Senator Bond, led the efforts in the Senate and introduced legislation that would help absorb some of the excess housing inventory and raise overall home values. But federal measures alone will not solve our credit problems. Those who are able to make their mortgage payments should fulfill their obligations. However, borrowers who are legitimately unable to afford their mortgages must reach out for help and demonstrate that they want to keep their homes. Next, we'll hear from Jake in Cypress.
Dear Senator Hutchison, what is Congress doing to offset the damage the housing crisis is having on the overall economy?
Well, thank you for your question, Jake. These past few months, the federal government has taken action to limit the impact of the housing slump on other markets. Congress enacted a law last year that makes mortgage forgiveness non-taxable for 3 years. This provides needed breathing room for borrowers to regain solid financial footing. In February, I helped pass a stimulus package that temporarily raises the loan limits for the Federal Housing Authority, or FHA. Government-sponsored entities such as Fannie Mae and Freddie Mac also were reformed. I also support legislation that would allow corporations to apply excess net operating losses to tax returns from past years. This measure would be particularly helpful to home builders who could receive an immediate rebate, helping them avoid dumping inventory, which would result in lower values throughout a neighborhood. Our final letter is from Robert in Wichita Falls.
Dear Senator Hutchison, I'm concerned about how the modernization of the Federal Housing Authority will affect my decision to seek a home mortgage loan. What are some of the changes Congress is making to FHA?
Well, thank you for your letter, Robert. FHA modernization is one of the most pressing issues facing Congress. I have been a champion for modernizing FHA for a number of years. FHA loan limits were temporarily increased by the Economic Stimulus Act passed earlier this year. However, it was temporary. It will expire in January 2009, when loan limits will return to $362,790 if Congress fails to provide a permanent fix. The permanent modernization of FHA would provide borrowers with better and more affordable government-insured mortgages. It would allow the FHA to insure larger loans, reaching more consumers who live in areas with expensive housing. This insurance allows private lenders the protection to offer more loans at lower rates, making them more affordable for borrowers like you. Specifically, modernization would enable the Federal Housing Authority to ensure more new home buyers by increasing the loan limit from 95% to 110% of area median home prices. The cap would be raised to $550,000. By focusing on 30-year fixed-rate mortgages, the FHA can help homeowners avoid and escape the risks associated with subprime mortgages. It is these that have resulted in rising default and foreclosure rates. Congress is working hard to ensure the FHA can meet the demands of those seeking home mortgages. We need to modernize the FHA and go a long way to providing a stable, predictable lending environment. We take this time in our program to highlight the people, places, and organizations that make Texas such a great place to live and work. During the Great Depression, the United States Housing Authority was created to help lend money to communities for low-cost housing construction. As a result, residential units sprang up across our nation, creating jobs, stimulating the economy, and providing affordable housing for millions of Americans. In 1965, the U.S. Housing Authority was incorporated into what is now the U.S. Department of Housing and Urban Development, or HUD. Through HUD, local housing authorities in Texas continue to uphold the legacy of the U.S. Housing Authority by building neighborhoods and promoting a sense of community throughout our state. Texas housing authorities face enormous challenges as they strive to make our communities better places to live. After Hurricanes Katrina and Rita, the Harris County Housing Authority in the Houston area faced daunting tasks to provide temporary housing for evacuees from South Louisiana. The Harris County Housing Authority designed a program with Fannie Mae to use foreclosed homes to provide shelter for disaster survivors. Over 35,000 families were housed during this emergency effort. The assistance and relief it provided during that incredible ordeal reflected the true spirit of our state and made Texas proud. It is no wonder that HUD has ranked Harris County as one of the best housing authorities in America for the past 5 years. Housing authorities offer unique solutions to help people realize the dream of home ownership and the pride of economic self-sufficiency. Texas housing organizations work hand in hand with nonprofit organizations like Habitat for Humanity and state and federal institutions to provide quality, affordable housing for so many hard-working people. As we continue to search for solutions to our current housing woes, Texas housing authorities will be instrumental in educating prospective homeowners and helping borrowers avoid foreclosure. The mortgage crisis presents our nation with a unique economic challenge. It is my hope that we can bring stability and security to the U.S. economy and help Americans keep their homes, while also allowing the housing market to correct itself. It's time to bring our program to a close. Thank you again to my guest, Senator Bond, for being with us today. I'm Senator Kay Bailey Hutchison, and I hope you've enjoyed this edition of Capitol Comment. And if you have any questions or comments about the program, let me know. In a moment on your screen, you'll see the addresses and telephone numbers of my offices throughout Texas and in Washington, D.C. I'd also like to encourage you to visit my website, hutchison.senate.gov. There, you can learn more about the many issues facing Texas and America, as well as the services my office provides. You can also contact me to share your opinions and link to a variety of helpful government resources. A special thank you to this station for airing important public affairs programs like this one. Until next time, that's this edition of Capitol Comment. Thank you for watching.